Good morning. This is Ron Brown. It is Sunday, the 12th of March, the first day of daylight savings time. And I'm going to do something a little bit different today as far as market analysis. I'll try to keep this relatively short also, but I want to show you some new things that I'm doing for market analysis in particular and stocks also. And I call this using HGSI to help manage fear and greed. This goes back to some workshop material from 2015. I'm not using any of those slides, but Ian was the master of Bollinger Bands, so I'm incorporating some Bollinger Bands into my analysis. I wish he were here to help me along with this, but I'll do the best I can and just show you some things I've been working on. First of all, once again, standard risk disclaimer: any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. Now, if you've been following me, you're all familiar with the NASDAQ analysis that I put out every morning. It's just a short commentary using this particular chart, and I'll show you where I am if you want to follow along and do this. I'm in my market analysis user groups, which come with the Insider Club, and I'm in folder number 1. And I'll click through to the warehouse, and today I've added the UVXY, the Ultra VIX short term. We don't have the VIX available in HGSI, but it's available many other places, so the UVXY will work as an indicator just to show that there is fear in the market. You can see it's the only green thing on my Major Markets Plus. So if you download the add-on today, you're going to have this in the folder, and it'll pass through view number 1. I've set the filter up so it'll pass through here. So what do we have? I mean, we have a disaster on our hands as far as the markets because of the Silicon Bank failure. The market was weak anyway, but when that happened, when that news was released on Friday, the banks took a tremendous beating, and they were already taking a beating on Thursday. But this is the way my Major Markets Plus folder ended up. I'm sorted on the percentage price change 1 day. I am now. I wasn't before. Anyway, you can see that the UVXY popped to the top of the list, and over a 5-day period, it's up 31.8%. If I bring this chart up down here, you can see that it was drifting down. There was an awful lot of complacency in the market, even though the market's been choppy, but you can see what happened over the past 2 days. There were pocket pivot, volume pocket pivots is what I call them. It's excessive volume. When you see a blue bar here, it means that volume was greater than any time, or than negative volume any time over the last 5 or 10 periods. So it shot up as fear came into the market, and it got clear up here to this point, and it backed off a little bit on Friday. So we'll see what happens going into, or when the market opens tomorrow. I really have no feel for what's going to happen tomorrow, but let's just concentrate on where the market stands right now. So here's my standard chart. I've got full screen over here. You can see, looking up here, we had a down bar after an up thrust, and that's what this, there was a little up thrust here where the wick is, and then this red triangle appeared along with an effort to fall, which is a bearish sign. Support going back to this area right here was broken. Let me zoom in a little bit on this. You can use the alternate 1 key to zoom in quickly, so you can see this automatic trend line, which was drawn here, a support line, not a trend line. It was broken on Friday, and we have a very bearish signal with excessive volume. So that means there is, or was, very little support in the market. The markets are really oversold right now. So if the big players feel that they can start buying here to support the market, we'll see some of that tomorrow. But like I said, I really have no clue. This support area here goes back to this candle right here. If it just blows through here, we could continue down. It's just really up in the air as far as I'm concerned. Now I want to show you that I put another chart in the analysis charts, and also down here, folder number 11, I put some Bollinger Band charts in. These are things I'll cover in some other video. But for now, I'm just going to go down to chart number 14. And this shows me the relationship of the candle to the Bollinger Bands. This is a Bollinger ribbon up here. Here is where the Bollinger percent B closed today, outside the band at minus 0.0096, and it was the percent one-day change is minus 0.1481, a big move. This ribbon is set up, if you right mouse click and edit the indicator, it tells you the levels where the colors change. So above 90 it's dark green, between 70 and 90 it's green, between 40 and 70 it's yellow, between 10 and 40 it's light red, and E is outside the band. So if you're familiar with Bollinger Bands, this just gives us a quick visual for strength and weakness, and you can see that as it shot down, or as it broke through the yellow into the red, that would signify a change in character as it went from dark green to yellow, and then to rose, and then finally to red. And then there was a rebound up here to yellow where it got back above 40, and then it rolled over, of course. But you can see that it's at the extreme as far as the Bollinger Bands are going. And if I go down here, there's the volume pocket pivot, the negative pocket pivot, and the I don't have 3 and 6 crossover here, but I left the histogram in here so I could tell when the 3 is above the 6, and it turned negative. It was almost negative on Wednesday, and then Thursday, and then Friday. Also the volume point of control, which had been positive for a few days here, turned negative. Now let's analyze these VPA flags. This candle right here was high volume down bar after an up move on high volume, indicates weakness. So what happened, there were 2 strong days that gapped open. It went up here to the top of the wick, or the market traded up to the top of the wick, and then it closed near the low of the day, and that is a sign that the so-called smart money, or the big players, the market makers and so on, are not supporting the market. So when you get a reversal like this, especially with a VPA flag, it shows weakness. And it opened here, traded up to the center Bollinger Band line, and then it failed, and that's another sign of weakness. I'll put a crosshair on here on above average volume. And then we had a day, and kind of an inside day, mostly an inside day because it was inside this candle. Looked like the market was going to hold, and then on Thursday it did open higher, traded up here, but there's that upper wick, and this tells us that the market was not being supported by the so-called smart money. And it continued down on Friday. So we had 2 very negative signals back to back, and now we're outside the Bollinger Band. So getting to the fear and greed, getting back to that theme, this would be considered greed up here when it trades outside the band, and then it started coming inside the band. It just got overextended, and with this gap up, that was an exhaustion gap. You can clearly see that. I believe in the report that I did that day, I said this could be, or could this be, an exhaustion gap, and that's exactly what it turned out to be. Market opened here the next day, tried to rally. This tells you that the smart money is not supporting going higher because of the long upper wick. Here we came down and had a test that looked like it was going to hold. Here's another, I mean, this is a no supply. This is a test. If you look over here, you can see what these are. No supply and a test. And then here's a test. Looked like maybe we had another shot at it, but inside day here, inside the prior day's candle, and then weakness. So we were not getting back up to surpass this high. So this is a lower high at this point. Lower high than this. And then we established a lower low here, and then we established another lower high. So the trend broke down below this support here, which was a lower low at that point, and it's really not gotten back. Okay, so we go over to here. Here's a bullish sign. Got up here. This could be considered a higher high if this would have pulled back and kept going, but it wasn't. So now here we are at the extremes of the Bollinger Band. Are we going to bounce from here? Not necessarily, because you can see what happened over here. This got outside the band here, and it kept going down. Then there was a rally. It stayed inside the bands, but notice the bands were widening on the 2 standard deviations. When we see a band, the center band going from down to up, and the price is up here between the center and the upper band, that's a good thing because the market's trending up, and it did great until this exhaustion gap here, and then from here you can see we've had a series of lower highs all the way down and lower lows also. You can see that many, if not all, well, I wouldn't say all, but most of these VPA signals are good, at least in the short term. They're short-term indicators based upon what either happens with a single bar or more than one bar, and for the most part they were correct. Okay, now I want to get out of this, and I want to move down the list. I don't want this to get too long, as I said. So what I'm going to do, rather than just looking at the NASDAQ, let's go into, I'm going to go to the spider sector ETFs, take the filter off with the shift key, and I'm going to click through, and I'll just move down here for, well, I guess I can just stay right here because this lets all of the spider sector show through if I don't engage the filter. But if I want to look at just ETFs, I just move down for ETF analysis and go to scorecard 1. And you can see what happened with these sector ETFs. Every one of them were down last week, with the consumer staples having the least damage. The worst damage was real estate sector, materials, financials, and so on. I'm sorry, this is 1 day. Here's 5 day. This is the column I wanted to look at. You can see how much damage was done over a 5-day period. Now I'm going to bring up a different chart. I'm going to go up two charts to number 12, a sector comparison. And what this does, this is the spider sectors right here. And if you look over here to the right, you can see what has happened with these sectors. Now this looks kind of like a jumbled mess here, but if you hit the alternate I key, it will identify these colors. Make sure you click on the last day, and then it will, if you go over here and look at the color coding, it tells you what these are. But primarily it's just to show direction, and at different parts of the year you'll see some of these going up and others going down and others staying flat, but in this instance they're all going down. Some are not down as much. In fact, if you edit the current view, you can look in here and see what the colors represent. Now the way I have this set up, I'm going to make this chart smaller up here, but I'm in the sector ETFs. I'm on consumer staples right now. If you look down here at this window, it says consumer staples, spider, the last close, and then the percentage price change over various time periods. And it is down 4.6% from the beginning of the year, and this is a chart down below. So I wanted to do this because this area here is just for general direction of the sectors, and you can see right here, for example, the brown line's moving up, but the blue line's moving down, the magenta line's moving up. The easiest way to identify these is to just click on this tool right up here and then go to the last day. You still have to sort out. Just look at the colors, and the orange is the industrials. The blue is technology, and then you can see them going in that direction. Or another tool we have is the ranking module. You just click on the ranking module right here. I'm on raw relative strength, and I am using percent change 1 week, and it tells me how much these fell during the week. And you can see the consumer staples, traditional safety group, fell the least, as did utilities. The financials were really hit hard, of course, down almost 8.5%. Just a tough week overall. But getting back to this chart, so you can see the sectors moving together. But if you want to analyze individuals charts, you have within this spider sector folder, you can come in here and select any of these. Let's just go to the financials, and then you can get a clear picture of what the VPA flags are, and you can draw support lines for support and resistance. Just bring up your alternate A key. If you want to draw a trend line, you can do that. But it's just a clean chart. But getting rid of the trend lines and so on, you can see the VPA flags. Now, was there word out about banks back here? Here is a no demand, a sign of weakness. Why is it no demand? Because it opened here, traded up to the high, and then closed about where it opened. And volume was very light down here. That's no demand. Not interested. The smart money's not interested in taking this sector higher. And then look what happened here. And this was on Friday, this is clear back on Tuesday. There was an effort to fall, and all of the sectors were falling at the same time. Volume was increasing, and then as the days went along, well, volume was down a little bit this day, but on Thursday, massive volume, and then huge volume here on Friday. But notice there's a stopping volume VPA flag here now. That doesn't mean it's over. It just means that buyers, once again, the so-called smart money, the deep pockets, they may think they're going to find some bargains here, so they're stepping in. And by the end of the day, you can see that it came from this point and closed right here on heavy volume. Consequently, we have a stopping volume. Normally indicates end of bearishness is nearing. It doesn't mean it's over. But this is just a clean chart with VPA and, with the sector comparisons above it. Kind of a handy chart, and if you want to, you can edit this current view. I put Bollinger Bands in here. They're invisible now, but if you want to have the bands in there, just I selected the wrong thing. You can just put the bands in, and you can tell if volatility was increasing, decreasing, and you can see as it started selling off how much the volatility was increasing because the bands were widening as this sector sold off. Now let's compare this quickly to consumer staples. And notice the bands are much tighter here. This is more of a gradual decline. Not extreme like the financial sector. Volume is heavy. It's been going up. But this is considered to be a more stable and safer group. I don't think there's much to pick from on the long side of the market. Let's just quickly, I'm going to go into consumer staples. I'm going to go up here to the industries and sectors. And here's consumer staples. Just go into this view. And you can see that there were some stocks that were up on Friday. If you want to look at the, see if there were signals, VPA signals, sort on this column, days since last VPA signal. If there's a 0, there was a VPA signal. And yellow strengthening returning on this one. Let's look at it. But I'm going to go to a different chart. Let's just go to the Bollinger, number 14. You can see a little bit of a strength returning here. There's the VPA flag, stopping volume and strengthening returning, so a double. Let's look at a longer view of this. Got to the edge of the Bollinger Bands, traded outside of it and came back in. There's no trend here though. I mean, it's just chopping around. Here's a stopping volume. Strengthening returning on this one, but 20 cents. No, that isn't it right here. There was a gap down evidently on earnings, and it's held 3 days in a row. So there's a test. You could put that in a watch list. A lot of work to be done though after that gap. Now let me show you something else here. See if I can do this. I'm going to do a multiple sort. And let's try this VPA signal condition. And then that will group all of these together where you can see yellow and red, and see if there are any green ones here. There's one, but see that signal is 5 days ago. 0 is today. Effort to rise was 5 days ago. So you want to stick with the zeros if you're looking for strength in this market in the strongest sector. Just go through these. Strengthening returning is stronger. Let's look at this reverse up thrust. Okay, it's a $2 stock, but this is a reverse up thrust and an effort to rise. Both of them here. So this is actually a pretty good looking chart. Tobacco, consumer staples. It's only a $2 stock though. I'm going to show you one more trick. Let's see, what do we have? 192 securities in here. That's a lot. I'm going to click on the ranking module. I'm going to go over here and change this to Wilder 14. And then I'll just change this to relative strength. it's going to take all of these stocks, 192 of them, and compare them using strong Wilder. Let me bring this up. Well, I don't know what the news was on this Friday, but these stocks near the top are going to be the stocks that are trending the most. Cody, it's pulling back, but it just came down to the lower band. Might be worth watching. I'm going to jump down to these other ones right here. I think this is the same chart. Pretty much the same chart. Cocoa. But all of these stocks, look at this one. Near the top. These are trending. The ones near the top. Anyway, I just want to give you some ideas, show you some of the power of the program, show you where the strength and the weakness is, and other things that I'm working with. Got a little bit long, but anyway, if you get through this, thanks for watching it.